Welcome back, Alpha Hunters. Man, what a day. What a wonderful hump day we are having on the markets today. The SPY up over 1%. Look at this super solid gap up. We got to about 0.5% on the day. And yeah, all the good news come from CPI that we got this morning. So we'll talk a little bit about that. But yeah, nice little gap up here, a little bit of a pullback, and then has just trended higher. I mean, so nice little 0.5% gap up. We've traded higher about 0.6% from there. So yeah, looking pretty good there on the day. SPY looking super solid. We did get that inflation data this morning, so we can talk briefly about that. Core inflation month over month did come in line, which was a forecast which came down from the prior month. So okay, so we're seeing inflation at least month over month come back down a little bit. I mean, we'll see if that happens again next month. But yeah, did see some inflation come down. Core inflation year over year, it did come down from last month as well, in line with forecast at 3.6%. Prior month was at 3.8%. And then total inflation down here, 3.4%, which was the same thing as forecast, which prior month was 3.5%. So there you go. Looking pretty good. Total inflation month over month was at 0.43%. Forecast was calling for 0.4%, which was the prior month was 0.4%. So we actually had a little bit of a win there. The market took it that way, and they should have. Inflation finally, after several months of going higher, has finally not gone higher this month. So there you go. Fed finally getting some reprieve on inflation being stubborn. So we'll see what happens. Obviously going forward in the next few months, we are kind of gonna get a little bit more into the spending kind of season, like travel, right? Fuel prices go higher here over the next month or two. So we'll see. If we'll see an uptick in inflation data next month and in July, so June and July, and we'll see what kind of inflation readings we get out then. Other than that, we'll just keep it rolling. Q's, nice gap up here. Q's trading very strong today, up 1.5% there on the Q's, looking really solid. IWM, solid gap up here. Obviously, you can see not as much of the intraday bullish activity. Did gap up about 1.1%. Nice little pullback. Bounced. Never made it up to those daily highs that we got on the first 5 minutes. Kind of just bouncing and hanging out. When the DIA, nice little bounce. Gap up here. Pullback. A little bit of an upward trend. Very much more timid though. A little bit. I mean, a little bit of higher push here from the open. Currently up about 0.75%. Not looking too bad, but definitely the Qs are carrying the day. You see the RSP here, nice little gap up. Kind of just mostly sideways from that kind of gap up spot. You can see we haven't really deviated too much from that first 5 minutes. A little bit of a pullback, bounce, new highs, and a little bit of a pullback. So that's kind of the way the market looks today. You can see a little bit small little doji candle there on RSP. We have a little bit of a gap on the markets, most of the markets here with today's gap up. So be interesting to see probably how long it takes to kind of come back and fill that in. DIA looking pretty solid here. I'd imagine we'd probably just continue higher on a lot of these. It's going to be kind of tough to say you want to be bullish right here, right now, just because as we were looking at a lot of these yesterday, they were already pretty well extended away from these moving averages. So it's going to be really tough to be like chips in, middle of the table. Yeah, it's going to be a little tough to say that one. So I would, I'm not looking to be bearish. I'm looking for pullback. That's it. I kind of mentioned that yesterday. But, we're up pretty well today, so I'll just expect some kind of pullback here over the next week and a half. And probably going to be bullish on that. IWM, looks like it filled its gap. A little bit of an overlap here between yesterday's high and today's low. Let's take a look intraday. Very, very small overlap between yesterday's open and today's little low. A little bit of an overlap there. So wicks do overlap on the day, but I could definitely see a little bit of a pullback here on the IWM as well. Qs are definitely one that, oh man, I would absolutely expect to see a pullback here sometime. Jeez. I mean, this is a great extension here on the Qs. Obviously, we gapped up to all-time highs on the SPY. We'll take a look at that, but we basically got there right on the open today on the Qs. Yeah, I mean, if you were trying to be bearish, you probably just had your stop loss right at the previous all-time high, and then it probably just triggered everybody to close stop losses or bearish positions. So, yeah, Qs probably just going to go higher. SPY definitely going to go higher. I was kind of wondering yesterday. We actually did rally into yesterday's kind of close. Kind of curious that that we did that. But when it was happening, once I got off the live stream yesterday, I was like, man, are we gonna go make a run to all-time highs at close yesterday? We didn't, but we got close, and we definitely just gapped up there this morning. So yeah, I mean, we'll probably continue higher here. I'd imagine Thursday, probably Friday, maybe hang out day a little bit. Probably expect some kind of pullback next week. But yeah, it looks really strong. I wouldn't be expecting to look to play this bearish in any way. You're probably just going to wait for a pullback. It's also going to be really kind of tough to play bullish as well. Give it like a week or so, and it'll probably see a pretty decent pullback. Anyways, that's kind of what's going on in the market today, and we'll take a look at a few other things here. VIX, VIX dropped off. Market's very bullish today. Makes sense. Dollar getting crushed. Look at the dollar move. So this is gonna be the other interesting thing. I was kind of thinking about this as well. Obviously, seeing the reaction to the DXY, the dollar's having down pretty good, but the way, this is not too hard to kind of imagine, but as the dollar decreases in power, inflation goes higher. So I'm curious, I'm just me being curious here, if we do see a drop off and a rapid drop off on the dollar, will we see inflation tick higher, especially in commodities, like crude oil, gas, heating oil, and those kinds of things, food. So that's going to be the areas I'll be really curious to see, because we know the dollar's been strong, especially for this year. Like, the dollar's been strong, and we've had inflation data. So now that we're having a dollar drop off, will the weaker dollar correspond to rising commodity prices, which obviously leads to inflation? Gold was looking good yesterday. We've talked about this over the past week. It looked, man, ever since really this day on May the 9th, we had this nice break higher, full body move up, looking really solid here. Looking really solid. There's not much else to say. Like, it was just continue to buy the dips on any kind of pullbacks that we get late April, early May here. I mean, that was the pullback. Continue to be bullish on it. So that's all we got. Much like the DXY, yields dropping off pretty solidly today. They quickly, when we got the data, just looking real quick intraday, you see that when we got the data this morning, we snapped right down to this level, which is the low that we just put in, or we just came down to over the past hour. We also came down to that level, and well, it corresponds with these two highs. So, will we see yields go higher and bounce here? I'm not gonna bet on it. But it is a very interesting spot. That is the spot where yields got to and they stopped. I guess we don't need these channel lines anymore, so we can remove those. So yeah, it's an interesting spot. That is where we've gotten to, and we have not gotten any further lower. Other than that, yields. I mean, obviously yields down is better valuation for equities. So I would expect the market to look pretty good going forward. Other than that, continue on. 10 2 inversion. A little bit of a pullback. Not, I mean, all the yields are kind of dropping off today pretty solidly. One more thing on yields, actually. Let me go back to the 30 year. So the 30 year, since we did away with that 10 year, the channel trend lines there on the 10 year, well, the 30 year still in its channel, right? We haven't broken this, and probably here over the next couple days will be in the lower ends of this channel, kind of where that line is, and that'll be also where these two highs are. So yeah, the 30 year still's not really broken its channel, but doesn't mean it won't. Anyways, moving on over to bonds, HYG. Not surprising here. This was looking really good here over the past couple of days. We had that sharp move higher at the beginning of May, had that pullback into the moving averages, consolidation. That was kind of like the do or die time, especially since we had all these lows that we broke down. We kind of rejected off of that spot right here twice here at the end of April, and then we broke through there at the beginning of May, pulled back right into those levels, and then it was looking really good for the bounce. We got the bounce today. Looks pretty solid, honestly. LQD. All right, LQD. This is an interesting spot. We obviously do have this downtrend line. Now, I like to have more than two, I guess, interactions with a trend line, to say that it's worth a damn. Okay, you can always take 2 points, right, and say, okay, this is a trend line, and really it's not, right? I mean, you can say, oh, I mean, that's a trend line, but is it really? Maybe not. So, anyways, it's kind of like do or die time here now to see if the market's going to respect this trend line, and yeah, I mean that's about it. So if the market does, we'll see yields bounce, we'll see bonds drop off. So that'd be interesting to see if that happens, because man, everything kind of points to yields maybe not being all that strong right now, especially since inflation just kind of dropped off a little bit. The only thing that I would say about yields if they go higher is if investors start to sell out of bonds, and it doesn't even really, interest rates don't matter to me. That, and I've mentioned this before a couple months back, that is a disaster scenario if that starts to happen. The interesting spot here on the TLT, and I didn't really, if we were going to see bonds go lower and yields go higher, I didn't really think we would get back to this level anytime soon. We have made a rapid move here in the month of May back to this low kind of area. That's also where the downtrending line is. So the TLT, LQD both at downtrending line, kind of important areas. Are we going to continue to see yields drop off? Obviously, bonds would go higher and break these kind of downtrends. That would be the start to not being obviously in a downtrend. But as for now, we're in it. So maybe not the best spot to be bullish on bonds. Obviously, down here was probably a decent spot. I wasn't thinking that, just due to previous spots in history where it seemed like we were breaking lower ends of channels. We would see drop offs, but yeah, I mean, if you're bullish down here, you're probably not looking to be bullish right here, right now. You're probably going to wait for us to break this downtrend, maybe get back bullish on a pullback after we clearly break this downtrend. You want to clearly break this downtrend. All right, take a look here at sector rotation. Obviously, tech is winning the day, looking really strong there. Real estate also looking really good. Obviously, we did have yields drop off quite substantially. You see real estate, huge gap up this morning, but it hasn't really done too much intraday. Utilities doing pretty good. Healthcare also doing pretty good. Okay. Industrials, communications, financials, energy, staples, materials, and discretionaries all underperforming there on the day. Okay. It's kind of interesting that Staples is actually, I mean, they're not a high flyer, but I mean, they're, they're really kind of underperforming. I didn't think they would do that bad if inflation actually kind of came down that much. But we can talk about that here in just a second, actually. PPI and CPI data back, on consecutive days. But yeah, you can see the intraday. I mean, tech is just absolutely just. I mean, they got on the train tracks and they're just steaming ahead. Tech looking really good. Healthcare also kind of in line with the market there. Energies, utilities underperforming. Staples, financials, industrials, communications, real estate, discretionaries, and materials. Okay, so those are all the underperforming sectors. Kind of how the pace of the day is kind of going across a lot of the sectors. One of those things that I was going to mention though about CPI, PPI, since we just got both of those data points back to back. So PPI was not as weak as CPI. CPI, I would say that was kind of weak. That was a really good win there for the Fed. As far as the PPI though, the PPI wasn't as weak. It actually was still kind of showing some pressure on inflation, and that's the one area I think that could, I mean, this those two combined together, right? The consumer price index and the producer price index, the one from yesterday morning, those two kind of combined together kind of gives you an idea that margins could get squeezed, right? If you're having higher producer prices, but consumer prices are not going higher, basically it just means margins are going to start getting squeezed a little bit. Now, maybe not. Maybe that's why staples aren't doing as well today. Financials make sense why they're not absolutely crushing it today because, I mean, financials do really good in higher interest rate environments. Obviously, we're having, yields dropping off quite substantially today. So, yeah, that's probably why the financials aren't as bullish today. But, yeah, I mean, it's not a bad thing that we got some deflation kind of coming in, even though PPI said producers have a little bit of inflation. Yesterday morning's report, it's okay. I think the market is just kind of a little bit more satisfied with the fact that inflation, the main inflation report that the market seems to respond to, is showing a little bit of reprieve, a little bit of releasing the pressure. And we'll just have to see if that continues here over the next month or two, especially if we see continued declines in the dollar and maybe we see spending kind of come back, especially like in energy and commodity type areas. So yeah, it'd be interesting.